Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Cuneyt Eti, co-founder of Capexmove, the London-based startup focused on the digitalization of capital markets using blockchain technologies. Cuneyt, thanks very much for joining us.
Pleasure to be here. Thank you. Thanks for having me.
Now, tell us the story of who and what is Capexmove. What gave you this idea of applying blockchain technology to the debt capital markets?
Yeah. As you said, we are a London-based startup focusing on digitalization of capital markets by using blockchain and smart contract technologies. In a nutshell, we provide solutions to our clients which support their efforts to remove repetitive and manual tasks from their day-to-day operations. And the reason we focus on debt capital markets is that because of the background of my co-founders, and also we saw quite room for improvement in capital markets.
Now you mentioned the background of your co-founders. You started in the bond markets, where I'm sure you identified lots of inefficiencies. It's fairly famous for them, and then you've moved into other areas of debt markets. Tell us more about that journey.
Yeah, actually, we started our journey back in 2017, but in the meantime, we received quite a demand for other financial assets as well. So, for example, recently we're working with a invoice factoring company and trade finance, where blockchain can add a lot of benefits as it helps institutions to remove the paper-based processes. And also we are working with a microfinance institution to develop a loan origination process based on blockchain technology that will help them to make the whole process more transparent.
Now, you're obviously a blockchain technology company. You're looking at the bond markets, you're looking at factoring, you're looking at trade finance, you're looking at microfinance. What is the particular application of blockchain to these asset classes, and why does it deliver superior outcomes to the outcomes which market participants are getting today from old-fashioned legacy technologies?
Yeah, because when you look at the conventional structure of financial markets, there are a number of intermediaries involved in all transactions, and also because of using multiple databases, that results certain differences in time, and that requires manual intervention from financial institutions for data reconciliation, which is quite costly and time-consuming.
Well, I'll come back to that. Those intermediation levels and databases in a second, but I just want to clear one thing up at the outset. Are you looking to digitize outstanding debt issues, or are you focusing at this stage purely on new issues?
Yeah, as a company, our focus is the new issues. We are dealing with financial institutions who are looking forward to issue new bonds for their existing clients.
Mm-hmm. But you would expect that the cost advantages of adopting your technology will gradually, the old legacy debt will be retired, and you would expect, if your expectations are fulfilled, for everybody to start using this methodology.
Yeah, definitely, because when you look at even the pilot projects around the world, the results are quite promising. The benefits when it comes to cost and fastening the whole process it's really amazing.
And it makes no sense for outstanding issues to transition onto this technology.
Yeah, I guess so. At least that's what I observe in the market.
Right. Anyway, you're using one of the advantages of the blockchain technology is ability to use smart contract, these pieces of code which automate processes. Now, I can see off the top of my head lots of applications for that in calculating coupons, paying coupons, redeeming bonds. all of that can be put into smart contracts, I guess. How do these differ from the legacy infrastructure which people are using to do these processes today? Are we talking about human beings shuffling paper, or are we talking about a more complex series of processes and links between different institutions?
Yeah, I think one example we can use is that central securities depositories, which holds the digital version of securities. Like, we can leverage a blockchain system which is going to act like a CSD, but it's going to be much more cost efficient, whereas all stakeholders will have the almost real-time access to most up-to-date information about the transactions. And the transactions will settle almost immediately.
Can I press you for a few more details on that? So at the moment, in a traditional issue, the issuer issues the bonds into a central securities depository, often in a global form. That CSD is responsible for guarding the integrity of the issues. It also takes on the responsibility of settling, deliveries of those securities against cash payment, usually in central bank money. Are you saying now that what happens here is that the bonds are issued by the issuer directly into the accounts of the either the distributors of the bond or the investors in the bonds? Is that how it works? So you can dispense with the CSD function altogether, and transactions settle, delivery against payment on your blockchain network. So both the main functions of CSD disappear. Is that right?
I think removing the CSD from the picture is going to be a huge step, and I'm not sure if it's going to happen or when. But by utilizing a blockchain system, as you said, the issuer can directly create a security on the blockchain, including all the stakeholders. It could be the agent banks or the investors, etc.
Okay, so CSDs are that function is not necessary any longer. So that's one huge cost saving. Now, clearly, people who are using the existing infrastructure, which you've referred to, of central security depositories and agent banks and presumably underwriting and sub-underwriting banks as well. Now, they have to be persuaded, including the issuers and the investors, have to be persuaded to stop doing things the way they're doing it and move to this new approach. Now, what are the main advantages? What are the main arguments that are going to persuade them, the benefits and advantages, what are going to persuade them to change the way they're doing things? What are they?
So obviously, the cost is the biggest thing, I think. And the second thing is going to be the transactions being much faster, and having a better oversight on transactions is pretty important for financial institutions when it comes to not only regulatory reporting, but also measuring their risks, like what they're holding in the balance sheet, etc. So, for example, one example I can give here is the monitoring of the covenants. For many institutions, it's a pretty manual process, but by leveraging smart contracts and blockchain technology, if you create a digital version of the bond, you can almost automate the covenant monitoring by using what we call oracles. And by doing so, the financial institutions almost immediately become aware of any covenant breaches and can react to it instead of sitting on that risk for 7 days or 10 days.
Mm-hmm. The oracle, by that you mean a third-party source of price information?
Yeah, in the blockchain world, what we refer as oracles is that gateways to the real world, because the blockchain technology has no visibility, or smart contracts has no visibility about what's going on in real life. And what in real life we refer as off-chain, and blockchain is called on-chain. So in order for smart contracts to interact with real life events or respond to them, there should be a gateway, and that gateway is called oracles.
Right. Okay. Now, you mentioned cost a minute ago, and the classic benefit of blockchain is disintermediation, losing intermediaries. Is that a feature of what you're proposing to do? You're going to start losing some of the intermediaries who add cost to this, both for issuers and for investors?
Yes, indeed. I mean, in our current financial transactions, like we require third parties and rely on legacy systems. And this is not only for individuals, but it also applies to financial institutions. So leveraging those third parties bring trust, but also bring additional costs and time as well. So by removing these intermediaries from the system, there will be huge cost benefits for the remaining stakeholders.
Mm-hmm. And the other classic benefit of blockchain is, of course, ending the need for data reconciliation. You've got a single ledger rather than having to reconcile dozens of ledgers between all the different parties in the chain. Talk me through how your technology delivers that benefit to issuers and investors.
Yeah, in our current world, like almost all of the stakeholders maintain their own versions of the database, and as a result, the information each party maintains not always match others' databases. And in order to overcome these differences, parties need to manually interact with each other and try to understand what is the underlying reason for that difference and try to solve it. This is an almost completely manual process that consumes a lot of cost, resources, and time. And but by using a blockchain system that effectively becomes a single source of information to all stakeholders, which is always up to date. This kind of structure ensures that parties involved in a transaction always have access to the most recent version of the information that is available.
Mm-hmm. Now, smart contracts must be a source of cost saving. I think what most people think of as a smart contract is it triggers an action when some conditions are met. Give me an example of how a smart contract is going to operate, I don't know, in the bond markets.
Yeah. So in the bond market, there are, as you said, a number of intermediaries, and these intermediaries, in many cases, interact with each other by using phones or emails, etc. But by using smart contracts, one action is going to trigger the other one, which is already coded in a smart contract that will fasten the process and remove the resources that are currently used to perform those operations. And also, when you look at the functions of financial institutions that are responsible for internal controls or regulatory compliance, significant amount of resources are devoted to those functions. But when you look at it, actually, their actions are pretty reactive instead of being proactive. By leveraging smart contracts in capital markets, you can embed the rules in a token, tokenized. If you're talking about a tokenized bond, you can embed all the rules and regulations in that token, and by this way, you ensure that that digital asset is going to be complying with all the existing rules and regulations during its life cycle.
Now, in a normal bond issue, those rules will be written down in the form of a legal contract between the issuer, the various servicing parties, and the end investors. Is the status, if you like, of smart contracts in law sufficiently established to be able to simply add to the tokens, pay this coupon on this date if this person owns this bond? Is there still legal reforms which are necessary for this model to work?
Yeah, exactly. I mean, the current level of technology enables us to perform certain actions, and the way we classify it is when you look at when we look at a contract, a legal contract, we classify clauses under two different categories, one operational and one non-operational. Paying a coupon is quite operational for us because you can code it. It could be coded in a binary form, like ones and zeros, because you know the date, you know the party you have to pay, you can calculate the amount you have to pay, etc. This is easy, but the non-operational clauses, such as in fairness, etc., it's not easy for computers to comment on subjective stuff. That's why, from technological perspective, we need a little bit more enhancement. But coming back to your question, I think there's still more to do from a legal perspective as well, because it's like super new technology, and we know that UK authorities and also other authorities around the world working towards adapting those technologies.
And what about mistakes? What you can't retrieve a smart contract once it's executed something. It's done.
Yeah.
Whereas in the normal bond markets, mistakes are made all the time.
Yeah,
Failure occurs
exactly.
all the time.
That's one of the questions we receive a lot, and actually there are certain things we can do, and we do in our developments. What we do is actually we put what we call a kill switch in a smart contract, and that kill switch can stop the function of a contract under certain circumstances if the consent from all the stakeholders are received. So in real life, like if you agree on not performing certain actions that a smart contract is going to do probably tomorrow, but you don't want to do it, then if all stakeholders go to the platform, click a couple of buttons saying that, okay, we consent to not to perform this action, smart contract is not going to do that.
Now we've talked about law, we've talked about correcting operational errors, if you like. What about the regulators? They have an interest in the behavior and performance of the marketplace as well, and they would expect to receive reports as to what's going on. Can you automate that regulatory reporting process as well?
Yes, exactly. Because one of the benefits of blockchain we already talk about is being a single source of truth, and it has the capability to collect and record all types of information you define at the inception. And by doing so, you also create a database that you will be able to leverage for regulatory reporting. And you don't have to end up working on Excel sheets trying to reconcile the information that you gather from different departments of the bank. And that will ease the process of regulatory reporting as well.
Now, ESG is a case in point here. If I'm an asset manager and I'm running an ESG fund, I want to buy some debt, and it'd be nice to know whether this bond issue is being used to finance a coal mine or a nuclear power station, or to burn the Brazilian rainforest, or to understand its purpose. Is that the kind of information which you can build into that reporting service as well?
Yeah, exactly. Smart contracts powered by oracles that help them to communicate with the real world can not only fasten the process and make it cheaper, but more importantly, can make it more transparent. And I think when it comes to a topic like ESG, the transparency is going to be more critical compared to cost.
But again, you'd be retrieving that information from the outside world through these oracles, and can it be bespoke to the needs of a particular asset manager or investor? Can they say, well, I want to see this, but I don't want to see that?
Yeah, sure. I mean, at the inception, you can code the rules in a way that it will be visible. A certain type of information will be only visible a certain type of stakeholders that have authority to access that information.
Now, we often read about regulators becoming nodes on blockchain networks, starting to see what's going on inside marketplaces, even right down to the level of individual bilateral transactions. Now, I can see advantages for that in that regulators have more rapid access to what's going on in a marketplace, so they can anticipate problems more readily. But also there'll be disadvantages. Are issuers and investors going to be comfortable with regulators being part of the same network as they are? I mean, you must have thought about this, the balance between these two issues. What's your view between the regulator as the precogs in the Minority Report versus protecting the privacy and confidentiality of the information of private actors?
Yeah. In the current world, in the current systems we have, when you look at the regulators and their reviews, they're quite like transaction focused and retrospective. So they have certain concerns about a certain period or certain type of transactions, let's say, and they extract that information and review it, and reach to certain conclusions. The way I see it in the future, we will start to see development of smart contract standards, or at least good practices in the market. And maybe the regulators will require institutions to adopt such standards. So this way, the whole process from their perspective will be more proactive as well, instead of being just responding to misconduct that already happened.
Now, to go back to the big theme of what you're doing, reduction of costs. Now, lower costs in any market generally means that market can get bigger and it can grow faster. In this case, issuers pay less to borrow money, investors pay less to invest. And are you projecting? Have you made any projections about what sort of growth this might add to the debt markets? Have you said, well, if you cut this amount of cost out, they will grow X% faster, maybe move into whole new asset classes? Have you thought about that at all?
Yeah, I think it will be beneficial for many stakeholders involved in the markets. So, for example, if you are an issuer, like capital markets provide you a lot of great tailored solutions. But the thing is, it comes with a cost right now. And if the transaction volume amount is not above a certain threshold, it's no more cost efficient for the issuer. But by leveraging these kind of solutions, actually, I think the banks or financial institutions will be able to offer the same solutions to smaller companies like SMEs maybe in the future. And this way, it will also benefit, in my view, the investors, because investors will have a larger pool to select from when they are investing. And at the end of the day, it will help them to more efficient diversification and less risks in their portfolios.
Okay. So to be clear about what you're saying, tokenization of debt issues onto a blockchain network means that the advantages of being a large issuer or a large investor are somewhat reduced. This can bring smaller issuers to market and bring smaller investors to market as well, because of the sort of kind of inverse scale economies. That's what you're saying, is it right?
Exactly. Because unlike conventional IT infrastructures or infrastructures financial institutions are using, if you adopt a blockchain solution, the additional client or additional issuer is not bringing a lot of cost to the financial institution. It's pretty scalable once you set up the system.
Uh-huh. Right, well, it sounds a great vision of the future. You've been at this, as you say, since 2017. What are the obstacles you still see in your path towards realizing this? Well, tell us where you've got to, and then tell us what obstacles you feel still lie in your path.
Yeah, I think you already mentioned one concern, which is privacy. It's a big concern for both investors and issuers. People don't like the idea of their data being out there, accessible to many different parties. And when we say data being out there, in the case of blockchain, it's going to be out there for a long time because you cannot delete it easily. Like, I think we will end up developing certain mechanisms to mitigate those risks. One thing we use is encryption. In certain cases, if the information is considered as confidential, we still put it on blockchain, but in a encrypted form, which limits the access to unwanted or unauthorized parties. And the other big challenge I see is the interoperability, which stands for different blockchain systems communicating with each other. Because I think the big risk for financial system is that different financial institutions developing their own permissioned private blockchain networks, which are not capable of talking to each other. In that case, we still end up with the almost same problems, like having data reconciliation issues, etc. So I think interoperability is going to be a huge focus going forward in the blockchain world.
And what's the solution to that interoperability problem? Is it data standards? We need a SWIFT for blockchain or something?
Yeah, data standards is definitely a big thing, because even institutions develop their own solutions. I think the data has to be standardized anyway. I think institutions are going to adopt certain standards, like ISDA developed great standards from that perspective. Mm-hmm. But the other thing is, even you have the standards, it doesn't mean that different blockchain systems will be able to talk to each other, because they will be built on different infrastructure and different technologies.
And you're going to have to coexist with the existing systems as well. So you kind of have to interoperate with them too, do you not?
Yeah, exactly. I think there will be a process where both type of assets will exist together. But once the benefits of digital assets and tokens will become super clear, crystal clear, then the financial institutions will start focusing on converting existing debt and securities to digital assets.
Mm-hmm. Can I ask you just one last question? I mean, building a blockchain network, persuading people to use it is one thing. And you touched on this earlier, the question of changing laws and regulations. You're based in the United Kingdom. Do you feel that the system of English law and the system of United Kingdom financial regulation is hospitable to what you're trying to do, or do you need it to change further?
I think I can say that UK is one of the countries at the forefront of this technology from that perspective, because I think we are fortunate enough to have like regulatory bodies or government institutions who are working very proactively on this technology, including the Financial Conduct Authority. We can look at the HMRC or Law Commission. They have been working on that technology, and they're looking for the ways to adapt the existing rules and regulations so that it becomes easy for innovation to work on the existing infrastructure.
Cuneyt Eti, thanks very much for taking the time to talk to us.
Thanks again for having me.